think it's infinitely harder to be a founder than to be a VC, but there are analogies in how the roles work. The founders often complain that, talking to a VC is kind of opaque. How do you get an introduction? How do you why is it so hard? It's kind of the meta test. That's the first test. And similarly with GPs and LPs, that's kind of the first test. If it was just a manual to follow, then there wouldn't be any signal in people doing it. Information asymmetry is so powerful, especially in venture, and especially as founders, that figuring it out is the first test that you can find asymmetric information.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by Foundersuite.com and FundingStack.com. I'm your host, Nathan Beckert, and today I'm with Kane Hsieh of Root Ventures, coming to us from San Francisco. How's your day going so far?
Pretty good. Excited to chat.
Great. Well, let's jump right to it. What is Root Ventures?
Yeah, so the simplest, most parsimonious way to describe Root Ventures is we are a dedicated pre-seed and seed fund. We are 4 GPs that all come from engineering backgrounds. Our junior investor comes from an engineering background. Even our operations manager comes from an engineering background. And we want to be the first institutional capital into great technical founding teams. Historically, we've experimented with more precise or prescriptive theses, but in going into our 4th fund, what we've come to conclude is we actually just want to let these founders kind of direct where things are going, and we'll focus on just great technical talent.
Okay, so let's get into that a little bit. So no specific thesis. You're not fintech, SaaS, applied AI, something like that. You're fairly broad engineering founders or technical founder led. What else are the common attributes, I guess?
Yeah, I would say, so you bring up fintech. We do have not exactly a blacklist, but call it a gray blacklist of categories where we do not have any particular competitive advantages, fintech being one of them, healthcare being the other. We, as a fund, we only do 6 to 8 new deals a year, so they're very high conviction. We don't have to lead, but we don't invest unless we are willing to lead. And so something that every founder has probably been annoyed by is a fund that says, oh, talk to us when you have a lead, or we're in as soon as you have a lead. There are some strategies there that work, and there are funds like that we also enjoy working with. But for us, it's if we're in, we're willing to lead. And if you have a lead you like, we're willing to work with them as well. So that's us in a nutshell. High conviction, high concentration, very few bets. So 6 to 8 deals a year between 4 partners is at most 2 deals per partner.
Yeah. What are a couple examples of recent deals you've done, just to give audience a flavor, a feel?
Yeah, so I would say that most recently, so this one hasn't closed yet. It's in the process of closing. So I'll give a high level description. Found a fantastic founder from Anduril and Apple, which is some pretty cool dual classing there. They had also spent time, and those are for the listeners that like trucks and redneck hobbies like me, he ran production for Fox Performance Shocks as well. And he's working on basically 100 to 200 pound thrust jet engines, which is a class of engine that didn't really need to exist before, but now there's a lot of demand for. That's a category we're pretty excited in. We are chasing down a deal that has to do with domestic electronic component manufacturing. And then deals that general listeners may have heard of, if you work in software, an IDE called Zed. If you work in mechanical engineering, a piece of design software called Entopology or just Entop. And if you work in electrical engineering, a piece of software called Quilter. And the common theme here is we just want to give engineers really good tools. My formal background academically is software engineering, but I grew up in the Rust Belt, and I love hot rodding trucks and motorcycles and snowmobiles, etc. And there's a lot of things that software engineers, God bless them, take for granted and are really efficient that other engineering disciplines don't really get.
Mm.
And we quite simply try to close the gap in capabilities for these other engineering disciplines. Software engineers have this beautiful virtuous cycle, which is they can improve their own tools.
Sure.
And that make and the medium that they work in is also the medium they ship. These are very tightly coupled improvement cycles, which look, if you could be the SVP of hardware at a place like Tesla and Apple, and you're like, wow, my design software really sucks. You don't actually have that many things you can do to improve it. And I think for a software engineer, that's like inconceivable. And so that's the gap we're trying to close.
Interesting. Do you feel like you're leaning more into, you mentioned the high thrust engine and electrical component manufacturing. Are you leaning more into hardware-ish stuff? And part of my question here is, you hear all this chatter these days, like investors are a little bit paralyzed, software investors are a little bit paralyzed because what's AI going to kill next, right? I don't know. Any
Yeah.
comments on that kind of two-part question, I guess? Yeah.
Yeah, so it's funny. We've sometimes people think of us as a hardware fund,
Hmm.
and that's because we do more than the average amount of hardware. The average amount of hardware that people do is zero. We tend to do 5 to 10% hardware deals, and so that makes us a hardware fund. My colleague Chrissy, she actually was the first EPM, so engineering program manager for the Apple Watch. So she was handpicked to join this like secret Apple Black site to work on a secret project, which became the watch. And her career and her personal interests are very heavily tied to hardware and manufacturing. Candidly, between call it 2012 and 2023, there actually wasn't that much opportunity to do venture investing in hardware.
Yeah.
There was this huge bull run in SaaS. We had a little side quests as an industry into NFTs, which seems to have been during ZERB. And I'm actually really excited now that generative AI is kind of pummeling SaaS because it's a forcing function for us as an industry to really look at other opportunities. And people have come up with cool names for it, call it American dynamism or reindustrialization, whatever nom de jour you want to use. But fundamentally, like it's an inherent interest for us. Our office here in San Francisco, we have a machine shop, we have a little electronics workbench, and we've had it there for about a decade, mostly out of personal interest. And it's exciting for us and me personally that there's now renewed capital interest in these categories.
Yeah, no, it's definitely cool. I was at a event last week called Founders Network, and it was in the Presidio, and it was really just a lot of founders talking about it. It was all about fundraising in the age of AI, and a lot of the talk was about moats, like how do you build a moat? Okay, do you have a data moat? Do you have a marketplace moat? Or do you have like a physical product moat? And
Yeah.
kind of everything else is like at risk, right? So, or,
I mean, as a VC or a founder, you want massive destabilizing technologies,
hmm,
right? Like if we're all just fighting for marginal utility across SaaS metrics, it's actually kind of boring,
sure.
right? That's you start to approach financial engineering, and there are asset classes which are really good at that, but it's not seed stage venture, it's not early stage venture. Generative AI is a boon for us. Like I don't want to look at the same 5 SaaS companies till the end of time and try to make I don't want to shit on companies publicly, but we can all imagine, think back to 2018. What are the exciting SaaS companies and what do they really do? Uh, Chaos is good for us.
I like that quote. Chaos is good for us. That's great. Yeah. We're a SaaS company. Foundersuite's a SaaS company, but we're leaning into our AI stuff. And it's both just a huge threat and a huge opportunity, right? It's like terrifying and exciting at the same time. And I'm sure everyone's kind of experiencing the same emotions. But yeah, chaos is generally good, at least for VCs, usually for startups too.
Good for founders.
Yeah.
It's good for founders, right? Otherwise you assume that the kings will remain kings
Yeah.
and get stronger. And every once in a while, you gotta shake the snow globe.
That's good. I like that. Very interesting. So you love the tinkerers, you love the experimenters. I guess let's go back. Let's actually start just kind of rewind a little bit about the Genesis story. So how did you guys four of you, four GPs kind of come together, and what was the original sort of
Yeah, that's right. So, myself, so my colleague Avidan Ross started Root Ventures. He was actually the CTO of a $20 billion private equity fund, and he was seeing he's a software and embedded systems engineer by training, and it's when you're at that scale, it's fundamentally financial engineering,
yeah.
which is really sophisticated, and you can make a lot of money doing it. But if your interest is core technologies, um, private equity is not necessarily what's going to be exciting for you. So he left on good terms and he started doing some angel investing. I was at a multi-stage fund feeling similar frustrations with, look, we should be deploying single-digit millions of dollars really early into really autistic and driven technical founders. And that sounds obvious now, but in the 2010s, exactly that wasn't as obvious. Granted, there was less venture capital available, but I felt similar frustrations as Avidan. I actually had seen him on term sheets when I was at the multi-stage fund, and we got into an argument on Twitter, and
Mm.
ended up deciding to work together. So that's actually how we started.
And was the thesis? I mean, your thesis is kind of a fuzzy thesis, but I get it, right? You're looking for the geeks, the engineers, the tinkerers, hackers. Was the thesis kind of the same at the time? And how much did you guys raise for your first fund?
First fund was around 30 million. It was actually 31,410,000 for, I forget, it was literally pi
Oh, I
times.
was gonna say, is that pie? It sounds like
Yeah.
pie. Okay.
As a joke. The thesis was we were a bit more prescriptive back then. There was actually, funnily enough, there was more intentional seeking of hardware opportunities, despite it being more challenging back then. And we've kind of come back around to that. But it was always, look, my view is if it's in open market, if there's a deck, we're already a little behind.
Mm-hmm.
I think it's a great time to be a founder. There are a ton of VCs. So as a VC, how do I stand out? Like I have to have some sort of alpha. I need some competitive edge,
Yeah.
both as an individual and as a fund. And as an individual and fund, we really lean on, look, if you're a technologist and you have a strong view of a class of problem or problem you want to solve, like why go through the horse and pony show of like making a deck and trying to explain, a bullshit made up TAM slide to generalists, right? That's a waste of your time. If we need to meet them where they are and like kind of be able to rapidly get to conviction with them, and that's the edge we try to trade on.
Maybe I'd summarize that as you're like tinkerer slash builder friendly. You're the colleagues of these guys versus the
Yeah,
funder
you
founder dynamic, right? I mean, that's kind of the angle you're trying to work.
yeah, and it's a bit of a meme, like, oh, I'm not a normal VC, I'm a cool VC, but like it is, if we do it right, it does land.
And I'll support what you're saying because your website's super cool. I said it to my engineering team, like, hey,
Yeah,
look at this cool website. Go to Root.vc, play around with it. You can program the espresso
yeah, that
machine
was
or
made
something.
for the people that we want to. So this is
Yeah.
this. I remember this because we shipped that for Fund 2, and at that time, a lot of the big multi-stage funds had decided to get in a pissing match and spend like, you know, 200, $300,000 on designers and make these shiny new websites, and they look beautiful.
Yeah.
But we're not the ones that are gonna go spend $200,000 on the shiny new website. So me and my partner here, Lee Edwards, we had a few beers and just cranked out that website. I don't want to get in like a money fight with a big multi-stage fund. Like you have to find
Yeah.
where your edge is, and that's kind of representative of our edge. Like this is generally true of any fund. Like I think it's brutally hard to be a mid-sized generalist right now.
I had Slow Ventures on a couple months ago, and they were kind of an interesting, similar strategy, right? They're like
Yeah.
kind of generalists. They do all kinds of stuff. It's hard to pin them down what they do, but the way they're like founder friendly, I guess, is enough of a magnet to draw in good deals, right?
Yeah. I mean, the reality is there's nothing that any fund can say or put in writing that fully captures what it is that would make them appeal to a founder they want to appeal to. Like it is very much an in-person ground game. I believe that me and my partners put in front of a really technical, motivated founder can make a strong appeal to take our money.
Do you ever find, and I'm an MBA, I'm the guy you don't want. Okay, let's be clear about that. That's fine. But do you ever find that these engineers, builders, tinkerers are maybe great at building something, but not at building a business? Like, do you find
Oh,
a split
all the
there?
time,
Yeah.
all the time. But there's some things that can be learned. There's some things that can be staffed for. Like no one is, or I shouldn't say no one. Definitionally, most founders are not generational founders. They're not the I can do everything. Although those people are great and fantastic, and we look for those too. Most people are human, they're mere mortals, and we enumerate like, hey, where do we think those gaps are? And we will underwrite that risk and solve that through advisors, through staffing, through coaching, whatever.
Yeah, I was going to ask that. Is that sort of part of the pitch too? Like, hey, you focus on getting this high thrust engine to work. We'll help you figure out the business distribution, go to market, all that stuff. Is that part of the?
Yeah, I don't claim to have that knowledge either, but the game, like especially seed stage, it is a social game
Yeah.
as much as anything else. My college roommate became a hotshot Hollywood agent, and it's funny, his parties are a lot more glamorous, but the mechanics of our jobs feel quite similar. It's a lot of scouting, and he spends a lot of time at what sound like pretty bad off-Broadway plays, scouting and making connections and forming opinions, and like okay, memes that I hate that we make fun of all the time internally, like we're going to use data to do better seed investing. Yeah. And we always say like, oh, why didn't we think of using
Yeah, right.
data? Like this is the first person that's ever thought of using data, right? It's of course it's boilerplate to use data to get as much information as you can. At the end of the day, it's a scouting and social game at the seed.
Are you finding, oh, so you're hearing a lot of chatter about how VCs are using AI or data or, combination of ways to scout, screen, process applicants, process people who are approaching them before they get into like a pitch meeting. Are you guys doing that or you're still kind of doing it?
Oh, 100%.
Yeah.
We internally we call it chain smoking tokens. We have a Mac Studio set up, which everyone on the team has discretionary budget for tokens and tools. And like your Zoom is on half my screen, the other half I'm kind of side-eyeing Claude Code, ripping through a project I set up in a .md file before this call. It's if you're not plugged into the matrix, why are you in this job?
Uh-huh. Can you share like what you're using it for and what you're doing with it? Like to score?
Yeah, I don't think there's no like silver bullet. Any task that was previously like finding and interpreting data, we just let the agents rip through now. In fact, we're trying to hire a junior investor right now. And the title's traditionally been analyst, but we all have Claude Pro and Codex 5.5 and whatever. We just need that person to be extremely online and embedded into the social networks that we care about. Like the actual other memes that I hate. Okay, these are my hot takes.
Go for it. Yeah.
Any VC that asks for use of funds at the C level is a midwit. Like, why ask that question? You're buying a few computers and you're buying headcount and compute. There's nothing in that question that could possibly inform your decision-making process. It's just like it's like a tick that people have. Like, what's your use of funds? I feel somewhat similarly about TAM often, at least in categories where you're betting on either huge amounts of latent demand or like a fundamental change in how people use technologies. Like anyone with half a brain can articulate a TAM that makes sense to a VC. It's a guess, right? So like, why bother asking? That's my view.
Sure. Yeah. It's made up. I mean, 90% of the time it's made up. Unless it's an established industry, then you're probably not interested.
Sure, yeah. Look, I get it. If you're a PE fund or you're a growth fund and you really need to like underwrite a very different level of risk and upside, sure. But at the seed stage?
Sure.
Yeah.
Okay, last question. I want to talk about your fundraising. I just have to ask this though, because I do use AI and these tools to more like source deals like, hey, go scan the universe of builders, deep tech founders, and reach out to the
We use
40,000.
AI. We use AI for everything we can, and we're trying to shove it into more places. Like we now
Where's
have
it paying off for
intelligence.
you? Where's it paying off? Like, where are you seeing real results?
Um, Sourcing is. I mean, look, the critical bottleneck in for all funds, especially C funds, is sourcing.
Yeah.
It is. There's good tools that kind of help, but you have to assume that all your competition has the same tools. So again, where's your edge? And that's us being more small. It's small things like making that website you mentioned, right? Like we made that by hand in 2018 or whatever, but we've had Claude Code ripping on it, refining it since it was in general release. Looking for founders, at least half of us have OpenClaw and the other half have used Cowork, but querying and at any point, if you're spending your time at a computer, at a keyboard, doing rote work, that should be replaced with AI, and that's the working attitude that we have. Like, why are we doing this specific task? Can it just be like, can this be solved by tokens?
Yeah. It's interesting.
There are some tasks which can. At the end of the day, like the decision to invest or not invest is currently, the purview of human judgment, or, people like to say taste now. Every task around it can probably be accelerated or replaced by tokens.
Yeah. No, I'm curious if it will go not too far, but too far in the other direction of like, hey, it's founders agents talking to VCs agents, and it's like the whole.
There will be a lot of that, but definitionally, seed investing or venture investing generally is what is everyone has the same tools and data. What is just that marginal edge or magic that you have in a view of how the world is going to be?
Yeah. Yeah.
Wait,
Interesting.
I recommend everyone reread Power Law if they haven't yet. I think the author's editorialization of contemporaneous events leaves a little to be desired, but the primary sources and the history part is very good. And KP bought like a quarter of Genentech for $100,000.
Hmm.
That's an insane deal. Like with the benefit of hindsight, of course you should buy a quarter of Genentech for $100,000 or whatever the terms around that were. Um, but at the time, it was crazy to put that much money into like, hey, could we make insulin with bacteria? That sounds insane.
Hmm.
The venture is always just tipping into things that sound insane. Because if it's obvious, if it's discoverable with general tokens, it is not definitionally going to be that world changing.
Interesting. Yeah. Good perspective. Okay. I don't want to keep you too long, but I do want to talk about the fundraising. So one was 31.4 pi to the
Yeah.
numbers. What was that? Friends and family? Was that people you knew? What was the
Friends,
split?
families, fools.
Okay. Yeah.
Yeah, which generally is how small funds start. Friends, families, and fools.
And then in this
Uh,
most recent fund of 190 million, so it's grown quite a bit. This was more traditional LPs. Maybe
Correct. A lot of institutions.
talk about that
Um,
evolution. Was the two funds in between kind of a hybrid or what?
yeah, it's the slow institutionalization of our LPs. Yeah, we think about this at Root. I think it's a generally good heuristic, which is where is there alpha in reinventing the wheel, and where should you just not reinvent the wheel? And at least for us right now, quality institutional LPs is not a wheel we should reinvent.
How is it? Is it changed? How do I ask this question? Like I'm looking at some of their LPs, like University of Chicago,
Yeah.
State of New Mexico. So these are DuPont Trust. These are like real old school LPs. Does that change how you invest? Like they're giving you carte blanche to go chase these insane, what did you call it? The insane, insane builders, insane niche, stuff like that.
It's not exactly carte, I wouldn't call it carte blanche. Like
Yeah.
we pitch just like founders pitch VCs pitch LPs on a specific thing or a specific view they have of the world or the market. And it's kind of on we can change that. A founder might call it a pivot. But it's kind of on us. If we do that, it's on us to convince our LPs that it's a good idea.
Yeah.
Right? There is no final judge or decider. It's whatever we can convince the LPs is a good idea, just like for founders, a good idea is whatever you can convince a VC is a good idea.
Maybe here's a better way to ask that. Like, have you had thesis drift over those funds, or has it been fairly consistent and you've just,
Yeah, specifics have drifted. I wouldn't use drift makes it sound passive. I would say they're re-architect or rewriting of the thesis. And you have look, adapt or die is literally written on our whiteboard right now.
I like
Um,
it. Yeah.
or another way to put it's like only the paranoid survive.
Yeah.
Like we have to be paranoid. Complacency is a slow death. And so every day we wake up and assume that we're going to get killed by our competition, by macro, by like large funds deciding they want to play in our space now. Although that's a funny separate story. Um, and so I don't know where this is from. If you know, please tell me. But it's a phrase I love, which is, and I heard it like decades ago. The gazelle doesn't wake up thinking it's going to survive, and the lion doesn't wake up thinking it's going to eat. They both wake up knowing they're going to have to run.
Mm, I like that. Yeah. I don't know. Probably an African proverb or something. But
Yeah,
it's good. I like it.
yeah.
Interesting.
And that's kind of like we are paranoid.
Because we do have some audience members that are emerging managers.
Mm.
What advice do you give them? How did you start to introduce institutional LPs? How did you get them? I mean, how did you source them? How did you reach out and connect with them? Stuff like that. Because some of our folks are, thinking about fund two or maybe even fund three now, and they're starting to think that direction, but it's a different animal in many ways. Any advice for like emerging fund managers?
Have a have a pitch for why you have alpha or why you have an edge, right? And it gets incrementally harder over time. Every asset class gets harder as it matures. I have friends in quant hedge funds, and those guys are making custom silicon, right? Like that's where how do you compete in quant hedge fund? You got to make your own silicon. That's crazy, right? At the beginning of an asset class is picking gold off the ground. That's buying 10% of Apple for 600,000 or Sequoia just released their 50-year anniversary of the Apple memo, right? 600,000 for 10% of Apple or thereabouts, and the memo says like terms are rich, right? KP buying a quarter of Genentech for $100,000. We look back and like, yeah, you were literally just picking gold off the ground. First few classes of YC, same thing. It gets harder, and that's just capitalism at work. That's great. Like you can't be a capitalist and complain when capitalism generates more efficiencies and makes your job harder. But it means, you got to wake up and run. So sorry, that was a bit of a ramble. All that's to
Yeah,
say,
no, it's interesting though. Yeah, definitely interesting.
have a specific view on where your edge is, and then beg, borrow, and steal introductions. Go to events, talk to other GPs that trade social favors. Like there's nothing I can say. If there was a checklist or a playbook, it would be easy and I wouldn't have a job. Definitionally, okay. So there's an analogy with founders, and I'll say up front, I think it's infinitely harder to be a founder than to be a VC. But there are analogies in how the roles work. The founders often complain that talking to a VC is kind of opaque. How do you get an introduction? How do you why is it so hard? It's kind of the meta test.
Mm.
That's the first test. And similarly with GPs and LPs, that's kind of the first test. If it was just a manual to follow, then there wouldn't be any signal in people doing it.
I like that. That's actually a good way to frame that because, yeah, I talked to both founders and VCs, emerging folks who are so frustrated. And I think that's a good way to put it. Like, this is your first test. You've got to figure it out. Beg, borrow, or steal, like you just said.
Information asymmetry is so powerful, especially in venture, and especially as founders, that figuring it out is the first test that you can find asymmetric information.
I love that. I love that. I'm probably gonna clip that out and make that a clip right there. I
Yeah,
like it.
good.
Yeah, that's good.
But I fundamentally believe that if a founder I've never heard of comes inbound to me from someone I really respect and that person's putting a good word, that already means something.
Yeah, I know. We have thousands of startups on our platform. And I'm always telling folks, You got to spend the time to either find that connection or backdoor your way into a warm intro. Reach out to
Yeah.
founders they funded, all the different ways, right? And people don't want to do that because it's hard work. But I agree,
Yeah.
that's your first test. Can you get a warm
There's
intro?
I actually started my academic career in biomedical engineering, which is super cool and awesome, but I was not a rigorous enough student to stay with it, hence the switch. But there's a concept in evolutionary biology called the Red Queen's race,
Mm,
which is basically you have to keep running to stay in place. And it's about usually like predator-prey dynamics or animals evolving in a niche, and their capabilities have to get more advanced for them to stay in the same place on the trophic web or in the niche or whatever. And that's capitalism.
yeah, I like it.
You
Interesting.
have to even stay, and this is people using advanced tools like Foundersuite make some things easier, but it just raises the bar at the same time,
Right.
and that's progress.
Interesting framework. Any other advice you would give an emerging manager coming to you? I like what you've said already. Or if you were talking to yourself, several years ago, your younger self advice when you were kind of getting the first fund or two off the ground, what would you share with younger Kane?
Well, I have specific advice as it pertains to our strategy, which is historically we were very disciplined about pricing, and that has served us well. But sometimes you can be overly disciplined on pricing.
Hmm.
And the really hard part is knowing when to break. Oh, so this then goes
Yeah.
back to, I guess this is a roundabout way of saying was a more generalized version of that, which is like you kind of need to have rules in the framework, and you kind of need that rules and framework to generally generate you alpha and returns. But the hard part is knowing when to break those rules or when to change those rules.
I assume I'm reading between lines. You maybe had an in on a potential deal and it was just priced out, and that
Yeah,
deal went out the
common
window.
story, common story.
Yeah.
But you can't, the fallacy of saying, well, obviously, if we just were more relaxed, we would have done it and win. But if we were more relaxed, we would have done a lot of horrible deals too.
Right. Right. Right.
And so
Right.
the real hard part is what is a generalizable learning that would that would have allowed us to do that, but not also be not have done a bunch of other bad deals in the fund. And it's hard because you can't back test it for a few reasons. One is like there aren't that, compared to public markets, there's very few reps, and the temporal resolution of any change is quite long, right? We're talking about months and years versus microseconds or even nanoseconds in public markets. And also, these outcomes are kind of path dependent. Well,
Mm-hmm.
sorry, VCs would like to believe they're path dependent because we think very highly of ourselves, and of course we help. Maybe it's actually not path dependent, right? Maybe you subscribe to like the historical great man or great founder hypothesis where these things were inevitable and not contingent. But as VCs, we like to believe that these things are path dependent because we think we do important work, and who knows, impossible to test. But I will be self-aware that that is our belief because we need to sell that to LPs.
Yeah, I like it. Really interesting. Okay, this is great. I have pages of notes already. Any other either advice for emerging managers or for founders or even founders interested in approaching you? Get the warm intro, but anything else, just general stuff you like to give? Pearls of wisdom.
Um, I mean, this is a very of the moment,
Mm.
but especially software engineers should be 100% AI pilled.
AI pilled.
Cool. Yeah, like you should be ripping on Claude Code or pick your coding agent.
Mhm.
But at this point, and I think it's safe to say this is a general view among VCs, but if your engineering teams aren't flying through coding agents, that's probably going to be a demerit.
Good point. I know. I'm trying to light the fire under ours a little bit to do more, and they're getting there. It's a bit of a shift, though. It's like,
It's a shift.
yeah. Okay. If people want to learn more, obviously your website, Root.vc. Anything else you want to plug, or I think you do a robot fight fest or something. Anything you want to
Yeah.
like plug in this last minute or so?
Um, Hackers and Painters is a book which is an anthology of various Paul Graham essays in the very early days of YC and even pre-YC. And right now, in a very transformative era, I think it's worth rereading. The essays are for free online at the program's blog, but the book is also great. And it helps you, for me, rereading it helped me realize like how chaotic and unknown and how much imperfect information there was at previous moments in history, whether it's cloud or mobile or even internet, and to be okay with the what feels like a big fog of war.
Interesting. Yeah, that's good. Hackers and painters.
Hackers and painters, and it's so I'm gonna date myself, but when I was in college, BlackBerry was still by far the dominant smartphone market or market leader. And when the BlackBerry Bold came out versus the Apple iPhone 3G, people were kind of split on which one was more exciting. And now, if you think, well, of course, like it was inevitable, it was so obvious. It wasn't obvious. Definitionally, it's never obvious, because if it was obvious, then no one would make money because they would be priced in. So reading Hackers and Painters really kind of helps me realize that, oh, at every point there was uncertainty and paranoia, and like getting comfortable with that and forming opinion and moving forward and being decisive. No.
I will say I'm older than you, and I miss the BlackBerry. I miss the freaking touch keypad still to this day.
Okay, so BlackBerry failed for a lot of unforced errors, and capitalism is a brutal mistress. However, what I really did like about BlackBerry that I don't like about Apple is BlackBerry devices always felt like they were designed for human hands.
Yeah. Mm-hmm.
With the materials and the proportions, versus the iPhone feels like a abstract plane of information.
Mm-hmm.
And while that's cool, I still have hands.
Yeah.
And until my consciousness is uploaded, I would like it to be a little more comfortable to hold. So that's my gripe. Yeah.
Yeah, I guess with voice text and everything else, it's like, but I was so fast on that keyboard, and I can't match that on the iPhone no matter how hard I try. Anyway, this is great. This is really a fun, interesting talk. I think that's it. We'll catch you after your Fun 5 and see what crazy stuff you and your founders are inventing at that point. Sound good?
Yeah, sounds good. Thanks a lot, Nathan.
All right. Thank you very much. Over now. Bye.
Bye.